Hi, welcome back to Joe Blogs. In this episode, I want to talk about the Chinese property market because things are starting to get really bad for China. And we've just seen the figures come out for August, and they show that they've had a 13th consecutive month of falling sales. So that's more than a year now that we've seen month-on-month falling sales. We've seen a fourth consecutive month of falling prices. But it's worse than all of that because we're not just looking at a downturn in the market. We are seeing a meltdown because home buyers have started boycotting their mortgages, which sounds crazy, but has been happening now for a little while, and it's starting to become a major problem. So I think it's worth having a recap on how the market operates because it's very different to any other property market in the world. We'll talk about buyers, how much they have to pay up front, when they actually take out their mortgages. We'll then have a look at the property developers because that's really where the problems have started. We'll then talk about the three red lines, which has nothing to do with animals. It's all about the rules and regulations that were brought in by the Chinese authorities. And that was really when the downturn started for the property market. We'll then talk about what issues this presents for China as a whole, because property is a really big part of the Chinese economy, much bigger than most other economies in the world. And then finally today, I'll wrap up with my summary. So what I think is likely to happen over the course of the next few months as we go through to the end of 2022, and what the risks are for the Chinese economy and the global economy, because China is the second biggest economy in the world. As you'll know if you follow the channel, it's forecast to overtake the USA at some point over the next couple of years in terms of becoming the biggest economy. But I think the property side of things actually represents a huge risk for China. This could be the Achilles heel for the Chinese economy. So before we get started on all of that, if I could ask you to give me a thumbs up at some point during this video, if you're enjoying the content, please subscribe if you haven't done so already. Don't forget, I always include chapters so you can skip over sections if you haven't got time to watch everything. And if you'd like to support the channel, please have a look below where you'll find links to YouTube Super Thanks and membership, as well as Buy Me a Coffee and Patreon. And if you're a regular shopper on Amazon, you can also find the link there that when you click through it, if you're buying something on Amazon, it doesn't have to be anything related to me. I will get paid a small commission because you've clicked through that link. If you look back at the history of China, for a long period of time it was completely communist, and therefore it was not possible to own any property. And then in the 1980s, reform started to be introduced, and the concept of privatization was brought in. So Chinese individuals were allowed to buy property. And because of the controls and restrictions in the country, it was one of the only asset classes that you were actually allowed to buy into. So as soon as the rules were changed and everybody was allowed to buy property, demand went through the roof. And in the period up to 2020, there was exponential growth in demand for property in China. And the percentage ownership rates right now are amongst the highest in the world. Around 90% of all Chinese individuals own property, and 20% own more than one property. And this was seen as being a no-risk gamble for a long period of time because prices just kept going up and up and up. And because Chinese banks were happy to provide mortgages to make these purchases, we had a virtuous circle where there was a free-flowing amount of capital in the economy, huge demand, and a lot of supply. So over the last 20 years or so, we have seen an incredible boom in house building in China. And the vast majority of the properties that have been constructed are apartments that are built in really big blocks. Thousands and thousands of apartments in one development. And we've seen developers building whole towns at a time, constructing completely new cities almost from scratch. So this has been one of the most incredible stories of the 21st century. The boom in the Chinese property market is like nowhere else on earth. We have seen an explosion in the amount of property and the demand for property. Now, in terms of financing the property purchases, China is also different to most other markets. The vast majority of properties that are being purchased in China are new builds. So this is different to most other markets where you'll have an existing stock, so all of the old houses, and then a percentage of new build. And somewhere like the USA, you're looking at around 10 or 15% of the property supply will come from new build, but the vast majority will be the existing homes that are already there. It's the opposite situation in China. The vast majority of all of the purchases on new build. And that's partly because of this huge increase in demand and the fact that historically a lot of the social housing wasn't the sort of properties that people wanted to buy. It wasn't aspirational. Everybody now wants apartment living in new developments, in new areas with new facilities. So that's how the market is being fueled. And over the last 20 years, more than 90% of all of the properties purchased have been new builds. Now, these new builds are being built by developers at a rapid pace, but they're not building them quickly enough for people to be able to buy them and move in straight away. So Chinese individuals have been happy to buy apartments off plans. And the way that the market works is that the vast majority of the purchase price is paid in full up front. So some developers were charging 100%. So you had to pay the full price of that property upon signing the deal. And that meant that for a lot of people who were borrowing to make that purchase, they were taking on a mortgage before the apartment had actually started to be constructed. And this is really unusual. In most of the world, you take on a mortgage at completion when you actually move into the property. So you have that debt from the first day that you move in. In China, you have that debt on the day that you sign to agree to buy that property. So that means that you're having to pay that debt, all of that interest on your mortgage, even though you're not living in the property. You're still living with your parents or wherever it might be, but you're paying the full cost of your mortgage from the point that you sign. Now, that obviously sounds crazy, and you may be thinking, why would anybody agree to hand over the full purchase price for a property when it hasn't even been built yet? But it really gives you an indication as to how desperate everybody was to become a property owner, to get onto the property ladder. And because property prices kept going up and up and up, it was seen as an investment. You put your money down, you agreed that purchase price, and by the time you moved into that property, the price would have gone up anyway. So you've actually made a profit in the interim period. So that was the mentality. That was the way people were looking at it. They were desperate to get that property because they knew it was a no-risk gamble. It would go up in value. Everyone's a winner. And in terms of the average percentage of mortgage, most buyers were taking mortgages for around 70% of the purchase price. So if you were paying $100,000 for your apartment, you could borrow $70,000, but you would need to find $30,000 as your deposit to go alongside the mortgage. So in many situations, the buyers were putting their life savings into these deals. So not only were you taking on the mortgage day one for that apartment that hasn't yet been built, you're also handing over all of your life savings to the developer who's building that apartment. So these were really, really big financial risks that all of the buyers were taking. But as I've said, it was a no-lose gamble. Prices were on the up, so what could possibly go wrong? And before we move on any further, I want to talk to you about today's sponsor, Ground News. Now, I'm often asked, where do you find your stories from? How do you find this data? And it is quite difficult because I'm constantly searching around on all of the news channels and talking to people and trying to uncover stories that I think would be interesting for you guys to watch. And Ground News is a really exciting website and app that is the world's first news comparison platform. It pulls together stories from more than 50,000 sources and posts them real time so you can see breaking news as and when it happens. But what's really different about Ground News is it gives you a breakdown of where that news originates from. So you can see who owns the news channels that's posting these stories, what level of factuality that story contains, and what political bias that news outlet has. So let's have a look at the articles that Ground News posted relating directly to today's video. So you can see the headline summary from Ground News was China property woes deepen in August as prices, sales and investment drop. Over here you can see how many articles have been sourced. So there were 4 different articles, one leaning left, one leaning right, one leaning centre. So that's shown in this chart here. If we scroll down, you can see that those articles are all linked here. So I can click in and actually read the full article myself. And this summary here tells me that this article is from the Inquirer. They have a lean towards the left politically. It's mixed in terms of how many facts are in that article. And this is the owner of that news channel. You can browse for free or subscribe for as low as $10 per year. To stay fully informed on issues like this, click on the link below, groundnews.com/Joe Blogs, and subscribe for unlimited access to media transparency, bias, blind spots, and comparative reporting coverage. Now, on the flip side of the equation, as the market was privatised and demand started to increase, the Chinese authorities realized that they needed a whole host of different property development companies to be able to construct the properties for the individuals to buy. And the only way to build out that market was by giving all of those companies large amounts of cash. Because when you're constructing large-scale developments with thousands of apartments and all of the infrastructure that's involved, you need a lot of capital up front. So in order to provide enough capital, the authorities instructed the Chinese banks to provide debt to these companies in order for them to start these build programs. And over the last 25 years, we have seen these Chinese development companies grow to be some of the biggest companies in the world. Well, certainly from a debt perspective. And I'm sure viewers who've followed this channel for quite a long time will be fully aware of Evergrande. Evergrande is infamous as having the biggest amount of debt out of any company in the whole of the world. It's built up over $300 billion of debt. $300 billion is a mind-bending amount of debt for any one individual company to have. And the reason that it built up so much debt is because Evergrande was growing aggressively. So the way that these real estate deals worked, initially you had to buy the land from the local authority. So that land may have cost $5 billion. So you'd need to borrow $5 million to make that purchase. You would then need another $5 or $10 billion to start that build, to hire all of the people, to bring in all the cranes and the infrastructure, to buy all of the materials. So Evergrande needed to borrow huge amounts to start one development. But Evergrande was very ambitious. So it didn't just focus on one development at a time. It built hundreds and hundreds of developments simultaneously all over China. And all of those developments were being funded by debt. So the more debt that Evergrande could borrow, the more build it could get involved in, the more profit it could make. And as I said, it was a no-lose gamble because property prices were going up forever. And therefore Evergrande could keep borrowing in the full knowledge that in the future it would have enough money to be able to pay that debt back. And of course, it wasn't just Evergrande. Evergrande is the poster boy here. It's the company that everybody talks about. But there are hundreds of other property developers in China that also have tens of billions of dollars of debt. So they've all been working with that same model of borrow as much as you can, borrow to buy the land, borrow to make the build, and then do it again on the next project. So they've all been doing this same thing. And the problem with a merry-go-round like this is that if you hit a problem, if you can't keep borrowing large amounts of debt, then everything starts to unwind and it can come down like a pack of cards. Well, in 2018, the Chinese authorities started to become concerned that a lot of these property development companies had too much debt. They'd over-leveraged their positions and that they were potentially at risk of going bankrupt. So in order to bring everybody back in line, the Chinese authorities introduced what was known as the 3 red lines. And the 3 red lines were financial tests for all property development companies to make sure that they were still profitable, they had enough cash, and they weren't over-leveraged. And the problem with the 3 red lines was as soon as they were introduced, many of the property developers triggered all 3 of them. And Evergrande was the first and most concerning of these because it had the most amount of debt. So as soon as this new policy was brought in, it caused a massive problem for Evergrande. Because they triggered all 3 of the tests, they were no longer able to draw down any more debt. The Chinese banks were told, do not give any more money to companies that are in breach of the 3 red lines. So that left Evergrande in a very difficult situation because it was reported that they had pre-sold 1.6 million homes to Chinese individuals. So they'd taken the money from all of those buyers, but they hadn't built out any of the properties. And the only way that they were going to be able to finish those properties was by borrowing more debt from the banks to complete the build and then give everybody what they'd already paid for in advance. So the fact that they couldn't access any more debt meant that they couldn't build those 1.6 million apartments, and obviously they couldn't build any more apartments. So this new policy effectively meant that Evergrande had to shut down all of its operations. Now, if you're a property development business with $300 billion of debt and you have to close down your operations, that causes you a major problem. Because in order to pay back that debt, you need to carry on making sales, you need to keep building. So as soon as you stop your operations, all of your income stops immediately. But the debt is still there. You still owe 300 billion plus interest. So essentially, by bringing in this new policy, the Chinese authorities effectively made Evergrande bankrupt. If they couldn't access any more capital, that meant they were completely out of business. And that was a major problem for the 1.6 million people who were waiting for Evergrande to finish building their apartments. So the Chinese authorities quickly realised that this new policy wasn't working. The policy had been introduced to bring the property developers back into line. But actually what the Chinese authorities had created was mass discontent amongst all of the population. And of course, this problem wasn't just restricted to Evergrande. It applied to hundreds of other developers. So millions and millions of Chinese buyers who'd prepaid for their apartments in full. Many of these people had given their life savings over to these developers alongside a 70% mortgage. So they'd got themselves into a huge amount of debt. They were all sitting there without any apartments and without any prospect of these developers being able to finish the apartments that were half built because they didn't have access to any capital. And as a direct result of this situation, confidence started to fall in the Chinese property market. People no longer saw the property market as a no-risk gamble. They could see that prices were starting to come down. And this was a massive shock for the market because up until that point, property was the primary form of investment in China. It's reported that around 70% of all private wealth is held in property. So this is what most people were ploughing all of their life savings into. They wanted to buy property as a long-term investment that would go up in value and make them rich. However, over the last 18 months or so, we've seen prices coming down, demand has softened, and of course that's causing even more problems for the developers because if they've got declining sales, then they're not able to make more profit to be able to pay off that debt. So we've got a really vicious circle now for all of these developers that they're over-leveraged, they've got too much debt, they need to keep building to try to pay that debt off. Demand is falling, prices are falling. So these companies are operating in a very difficult market and a lot of them are insolvent. They won't be able to pay back this amount of debt. And this is one of the main problems that's facing the Chinese economy right now. As I mentioned earlier, the property market in China is dominated by new build housing. It's the vast majority of all purchases. And this chart shows the movement in prices of new build housing over the last 12 months. And you can see that we have seen a massive fall in prices consistently in the last year. The average new home price in China's 70 major cities dropped by 1.3% year on year in August, which is a deepening from the 0.9% decline seen in July. This is now the fourth consecutive month of new home price decreases. Prices are now falling at the fastest rate for the last 12 months, and the fall in August is the biggest that we've seen in the market since August 2015. And this graph shows the movement in new house prices over the last 5 years. And you can see that from 2019 onwards, there has been a consistent and steady decline in new house prices. And this corresponds exactly to the introduction of the 3 red lines when property developers suddenly found it difficult to be able to access more debt to keep building, and so confidence started to unwind in the property market in China. Property investment and new construction starts by developers also fell in August, suggesting that many real estate companies are still focusing on paying back debt instead of launching new projects. Investment dropped 13.8% year on year in August after slumping 12.3% in July. And in the first 8 months of 2022, total investment is down by 7.4%. New construction starts, measured by floor area, plunged 45.7% year on year, biggest fall in almost a decade. And that followed on from a slump of 45.4% in July. Just to make matters worse for the Chinese developers, the Chinese yuan also fell. And that means that any property developers that have issued bonds in US dollars will now be facing a bigger cost in terms of replacing that because they're selling properties at home in yuan, but they're obviously having to then convert that currency into dollars in order to repay the bonds. Now, as a result of the factors that we've just discussed, Chinese home buyers are now starting to boycott the mortgages that they're having to pay on properties that haven't been completed by the property developers. And it's reported that the boycotts are affecting more than 100 cities in China and over 320 developments. And the Chinese banks and authorities are obviously in a very difficult situation here because normally when you have a mortgage, you have security over the property that that person has purchased. So if that individual then stops paying that mortgage so they can't keep up the payments, then the bank will have the ultimate decision as to whether or not it should foreclose and repossess that property and then sell it in the open market. But obviously, if you've got a situation where an individual hasn't actually taken ownership of that property because it hasn't been built yet, it's still in the process of being constructed, then you don't actually have any real security. There's nothing tangible for the bank to be able to recover. So in any other country in the world, that's why you don't draw down your mortgage before you move into the property, because the bank won't allow you to. It won't give you the money in advance and then hope that that property is constructed, because otherwise the bank is lending against fresh air. It doesn't have any tangible security. But that's the situation that the banks have found themselves in China. And so it's a really interesting question as to what they do next. Because there is no property to be able to repossess and sell, the only other option that they've then got is to make that person bankrupt, to actually go after them for the debt and take any other assets that they own. But obviously, from a reputational point of view, that wouldn't really be very good PR, because you've already got an individual who's given over their life savings and taken on a massive amount of debt on the hope that they're going to get this apartment constructed by companies like Evergrande. So they're already really unhappy because they're not living there, but they're still paying for that debt. And then potentially, to make matters even worse, that person could be made bankrupt because the bank comes after them for non-payment of the mortgage on the property that doesn't exist. So this is a really big call for the banks. And I think the Chinese authorities will need to get a grip of this, because what they can't have is thousands and thousands of people, potentially millions of people, starting to be made bankrupt as a direct result of what the property developers have been doing, because those developers took the money off those individuals in good faith. They said that they were going to build these apartments. They haven't done that for various reasons. They don't have the capital to be able to complete most of these apartments. So I don't think the Chinese authorities will allow the banks to actually go after all of these individuals. So ultimately, I think the banks will have to just wear this. They'll have to just lose the interest for a period of time. And the pressure will now be applied onto the developers to get those apartments built. But of course, they need more money in order to do that. And the only way that they're going to be able to solve that problem is by releasing more funds through the banks. And I think what we will see is this nationalisation of the developments that are in progress. They'll either be taken on by the authorities or they'll be moved to state-owned enterprises to complete out those builds. Because the alternative of making all of these borrowers bankrupt is only going to cause more problems for the property market, because if that news gets out, it's going to stop anybody buying off plan, and certainly anybody from taking a mortgage to buy off plan, because you may never see that apartment and you're putting yourself at the risk of going bankrupt. So what does all of this mean for the Chinese economy? Well, the problem that China has is that it's built its growth over the last 25 years on the real estate sector. It accounts for around 30% of the growth of the Chinese economy because it's employing a huge amount of people. The construction sector in China is absolutely massive. China has a population of over 1.4 billion. There are 39 cities in China that have a population of more than 3 million. And 7 cities have a population of more than 10 million. They've got 2 cities with more than 20 million. And when you've got that many people, it means that you can build millions of apartments. And of course, to do that, you need to employ tens of millions of people in all of the different aspects of construction. So this is a really big part of the economy. So an estimated fall of 30% in the real estate sector is going to have a huge impact on the Chinese economy as a whole. But it's also having a bigger impact because, as I mentioned earlier, around 70% of all of the private investment, Chinese individuals' wealth is tied up into real estate. And over the last 20 years or so, that's been great because we've seen year-on-year increases in the value of properties. Everybody's felt wealthy and they're happy that they've owned property. Over the last couple of years, that's really started to unwind in a massive fashion. There are millions of people in China who've handed over their life savings, who've now got large mortgages for properties that don't even exist. They haven't been built, so they're not living in those properties. They're paying for them. They put all of their money into them, but they're actually worthless right now because they're semi-constructed. So this is an absolute nightmare from the Chinese authorities' perspective, because you've got a lot of people who you've told over the last 30 years to get involved in property. Everybody wanted to be there. And all of a sudden, because the market's in free fall and these developers have failed to deliver on all of their obligations, you've now got a lot of individuals individuals who are potentially at risk of going bankrupt because they can't keep paying these mortgages and they've got nowhere to live. They're not actually living in the property that they've purchased. So very unusual situation and one that isn't sustainable. So what we're starting to see is that a lot of the property developers are being either nationalised officially, so they're being taken over by some of the state-run entities, or they're being unofficially nationalised. So a lot of the developments that these companies are involved with are being transferred over to the state-owned enterprises, and then the companies themselves are just being left to go to rack and ruin. And it'll be interesting to see what happens with Evergrande because it's in serious financial difficulty. And it seems that the authorities are cherry-picking the best of all of the developments, moving them to some of the state-owned enterprises, and Evergrande may well go bust at some point in the future. But there's a big question mark as to whether the Chinese authorities will let it go down, will let all the international markets lose all of their money, or whether they'll stand by and pay some of that back. And my bet is that Evergrande probably will go bust at some point over the next few years. So all of this has become an absolute nightmare for the Chinese authorities because they've built the economy with real estate as the beating heart of China. And now that that heart has stopped, they are in serious difficulty. So what's the summary and conclusion today? Well, clearly what's going on in the Chinese property market right now is bad news. We've seen sales volumes fall in August for the 13th consecutive month, and prices are down for the 4th consecutive month. And the reason that this is so concerning is that the real estate sector represents around 30% of the Chinese economy. So China is entirely dependent on real estate. So now that we're seeing real estate going into free fall, that's putting a massive question mark as to what's going to happen for the Chinese economy as a whole for 2022 and beyond. Because when you look at the fundamentals of what's happening in the Chinese property market, it's not good news. The property market in China has been built on two premises. Firstly, that prices would keep going up, and that drove a huge increase in demand. And secondly, that the developers who are involved in building those projects could get access to never-ending amounts of capital. Now, both of those premises have been completely wiped out over the last 18 months or so. We've started to see prices come down, and that's driven a huge fall in confidence in the market. So Chinese buyers are now concerned that prices won't keep rising. But one of the other problems that we've got with regards to buyers is that the whole market has been built on this concept of borrowing money in advance of the property being constructed. And what we're seeing now is that is starting to implode because a lot of these properties have never been finished. Therefore, they've not been handed over to the buyers, and the buyers are now having to pay those mortgages at a time when they're not actually living in those properties. And to make matters worse, they're seeing the value of those properties falling. So they may end up completing on a property that's now worth significantly less than the price that they paid for it 12 or 18 months ago. And of course, added to that, we've got the major problem of the developers no longer being able to access large amounts of debt to finish these builds. So we've got a supply problem and a demand problem simultaneously in the Chinese property market. And both of those issues are going to be really difficult to fix for China. The Chinese property development sector is over-leveraged, no question about it. There are multiple companies that have got far too much debt that they can handle. So all of those companies need to be either restructured or closed down. And the problem with that is that if you're doing either of those things, it's going to cause you operational problems in order to carry on the builds that are partly complete. So it's a virtuous circle at the moment. It's a really big problem for China. So it's estimated that 2022 will see a fall of around 30% in the real estate sector. And that will feed directly into the Chinese economy. The forecasts for China as a whole have been downgraded, and we're now looking at year-on-year growth in GDP of around 3%, which is the lowest since 1976. So this is a really big slowdown for China. And that, of course, then puts a big question mark as to whether or not they will go on to become the largest economy in the world, or whether those ambitions have been shot down by the bursting of the real estate bubble. Now, in terms of the global economy, China's slowdown will impact everybody, because although China is a net exporter, it still imports a lot of goods from the rest of the world. So if the Chinese economy contracts, that demand contracts, and that means people are selling less in terms of exports. But of course, the slowdown in the Chinese economy is coming at a time when we're expecting a global recession anyway, as a result of Russia's invasion of Ukraine. We've seen high prices of oil and gas and commodities and food, and high inflation around the world is causing major problems. So we're already looking at a global contraction. And if we get a contraction in China as a result of this real estate crisis, then that potentially is a double whammy, and it's going to accelerate the global recession that we're expecting to come at the end of 2022 or early 2023. So overall, this is bad news for everybody. It's really bad news for China, and there's no obvious fix to the problem. So I don't think this is something that's going to be a short-lived affair. It's likely to impact on China's output for at least the next 12 to 18 months. But it's also bad news for the rest of us because it's going to make the global recession worse. So hopefully you've enjoyed today's episode. You found it interesting, useful, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. And don't forget to subscribe if you haven't done so already.